Good afternoon. Here it is Tuesday, January 22nd. Stratton Mortgage very first podcast, season 1, episode 1. This is something we've been really excited about, trying to get some information out there in front of people. I have all of our guys in here. We got Bill, Adam, Trey. Just have some discussions here to try to help shed some light on this industry and a lot of questions that people don't know to ask. I think one of the first things we want to talk about is, do you know what a wholesale lender is? I know I talked to a lot of customers. You guys probably as well. I asked that question. Do you know the difference between a wholesale lender, retail bank, or a correspondent lender? The question 9 times out of 10 is no, I don't. People don't know to ask that question. So with that said, what do you guys hear from people when it comes to correspondent lenders and retail banks and what they may or may not know about the difference between them?
Well, I think the banks are between us and them, they're more regulated. We have our basic lenders that are out there, and all they do is mortgages. You can't go and walk in the door and make your payment. You cannot get a car loan there. You can't get a loan for anything else there but a residential mortgage property. So that's what we specialize in, and that's what our rates are based on. Everything's based on just mortgages, and I think that's if you go to Huntington Bank or some other bank, you're going to walk in and they could be working on several different products and not really specialize in what they do. So
car loans, investments.
Yeah, because a car loan, a mortgage, a student loan, a credit card, that's an ancillary item that a bank would have. So a bank is there for checking and savings. They offer those things as ancillary products that they have. Might not be their bread and butter or what they do. So you definitely want to keep that in mind.
Yeah, and I would think too, the retail banks on top of that, they're shareholders. So if you watch or follow the stock market, they have bottom lines that they need to make sure their shareholders are investing in that company. That said, there's margins there they've got to make sure they meet. The companies we work with, they're not publicly traded companies. They're out there. They get money from the Federal Reserve, and we're able to pass this down to you, to the consumer, at a much better price. Again, questions that people don't know to ask. How are we able to get these pricing the way we do?
And some people always think that they got to put a big down payment on a house, and the reality is they don't. I mean, we have the small 1% downs from one bank. We have 3% down, 5% down, whatever adheres to anybody's needs.
What you just said right there.
Everybody's
one bank,
needs.
So that's one bank we have. Oh, then we have another one, right?
Right.
So there's more than one.
Sure.
So you walk to Huntington, it's just Huntington. If they
Right.
can't do it, they can't do it. But
Right.
we have options.
Yeah.
Yeah, we have several different investors that each lender is going to offer their own unique or whatever they want to. They're going to lend money in a certain area, and some of them will cover more than one area, obviously, right? And we can use that as competition against them to see who's got a better deal. Maybe somebody's giving more of a credit, somebody's giving an appraisal waiver, like United Wholesale.
Tell us
Mortgage
about
is
the
doing.
appraisal waiver, Adam. Just
right
so everybody
now
knows what that
through-
means, because right now this is going on everywhere, and you're not going to get it if you walk into a bank.
Yeah,
So
even
go ahead and tell
Ackerman, you might hear PIW, property inspection waiver.
Yeah.
It's a big deal.
So with one of the investors that we have right now I believe it's through the end of February, if you're doing a Home Possible or Home Ready program, which is a conventional loan program with as little as 3% down, they will actually reimburse the customer for the appraisal at closing. So essentially, you're getting a free appraisal, on your property when you're purchasing or refinancing, which is nice because not a lot of lenders will do that, and that saves you roughly $500 in cost.
Now,
Depending
you do have to
on
pay
where the
for it up
property
front,
is.
though.
You do pay for it up front,
Yeah.
but they will reimburse you once you go to closing. They will reimburse you on the statement. So if you're purchasing a home, that's $500 less that you're going to need to bring to closing. If you're refinancing a home, obviously we've all got refinances going on right now. That's $500 less in cost that you're going to have to pay or finance into your loan. So either way you look at it, that's a benefit that, in our case, that one particular lender will provide.
I think I saw one today, too, on FHA where the appraisals were actually getting paid for by one of the lenders.
I think actually Stearns is paying for FHA
Yeah.
appraisals right now. So,
Yeah.
but that's our advantage. If we were X bank or X retail lender, we can only offer whatever we can offer at that time. Whereas a broker, programs, pricing, specials, that stuff changes. And so if we have an FHA buyer and maybe Stearns has a really good deal for them, we'll go there because that gets the buyer the better deal versus some of the other lenders that are there, or gets them a free appraisal or cheaper costs. We are not captive to one particular institution, which does matter and does make a difference.
Yeah, can you imagine only having one cell phone carrier? What your bill would be like, or customer service? It would be, we can all relate to cell phones in that regard.
Only McDonald's.
I mean,
what if you're a Wendy's guy?
You could imagine
Taco Bell, like the Demolition Man.
You're in trouble, man.
You think about it, you start taking options away from people, then that's when the rich get richer because they can just really monopolize a whole portion of what you're trying to do and shop. And that's what we do. We have that luxury of having all these options for you. That's the retail side. And what about correspondent?
Now, also that you got to bring into the aspect of the speed and processing that's going on in our broker world as compared to the bank, because the bank, at least from what I see out there, because we do send a couple deals to banks, but it seems like it's a lot slower. And the digital marketing age is here. Some of our lenders with, tell us some about things that you did, Tom. I mean, you've closed one, I think, 11 days or something crazy fast. I mean, that's unheard of on a purchase transaction, but we're doing it.
Yeah, and just last month, right before the holidays, we got a few loans closed in 8 days. We got done before the remedies part, which remedies, somebody's bought a home, is, hey, you have an inspector come in, they're trying to find something wrong with the house, you have to agree with that seller, what's going to be fixed and what's not. That wasn't even done before our loan got clear to close, and the survey on the property. So yeah, it's just less stress on you as a buyer to know that, hey, everything's done, and I had very little effort into this thing.
Right. I actually heard you call. I heard you call the agent and say, "Hey, man, when we close it?" He's like, "What?"
Yeah, they went on vacation and came in to clear to close, and they didn't have the remedies done yet. So, again, going into the holidays, how stress-free is that for you? I mean, does it matter if it's a holiday? Just in general, knowing that here I'm not trying to figure out when can I schedule a moving truck. In advance when things are done. And again, just the transparency that goes along behind that is, something that's a big difference for us too.
Well, that comes with too, just the fact that a lot of these wholesale lenders, or the ones that we work with, and for the most part, are very large institutions and have much more of ability to provide top tier technology than we would if we were a local small lender or a local small bank, or a local mortgage banker that doesn't have as much money and capital as these main institutions do. They can't provide the same level of technology. Yeah. So now, us as a broker, we're able to offer better products, faster turnaround times, a better experience,
less efforts
because
for a
we're
consumer.
Utilizing technology, and it's making it easier for the consumer, cheaper for the consumer. And in most people's viewpoints, better for the consumer. It's an all around better experience because we have access to that technology, whereas a mid-level mortgage banker in the area doesn't have that type of money to be able to institute those types of changes. And I think anybody at this table can agree in the past year we've seen a ton of changes from what it was a year ago till now in the broker world, in technology and what's being used and how much easier it is to get things done, not only on our end but for the borrower too. I've got a loan right now where they haven't submitted me anything. We electronically verified income and assets, ordered everything through the processor assist. The borrower literally had to e-sign some documents.
An e-sign just means you electronically sign that you click a button to sign your name. It's that simple today.
Get online, review it, you agree to it, you e-sign it, that's it.
You have electronic
She's
documents.
literally waiting for her appraisal to come back so she can close. That's it. It took her not even 10 minutes of her time. In her case, it's a refinance with a free appraisal, reducing her interest rate, reducing her monthly payment, reducing her mortgage insurance.
Right, and you can actually order the appraisal the minute she e-signs, right? Or
she e-signs and gives consent. We ordered the appraisal, which she got an email to pay for that.
Right.
Initially upfront, and then it'll be reimbursed to her.
Yeah, I had one where the appraisal got back before my title work got back, which is crazy fast, so because of that, and I think with the technology moving forward, and then what's happening too is we're starting to see a little rate war come down too with the the bigger banks, and just recently, anyways, what we've seen.
Well, that's our advantage that we have is, if two investors are quote unquote going after each other, which it kind of seems like they are, that's actually benefiting the consumer because now the consumer is getting a better deal. And so, what we do is we look around and say, okay, here's your criteria for a loan. What box do you fit in? Now we're in that box. Let's see who's going to give you a loan, and let's have them compete for you. Maybe somebody's going to give you a free appraisal. Maybe somebody has a little bit of a credit off of some of the fees that you can get, or reduced fees, or a better interest rate than what another lenders offers. So we have to factor all those things into play and figure out, based upon that customer's situation, what's going to be the best situation for them based upon what they're trying to do. And then we can present those options to them, and say, hey, here's what we feel is best. What do you feel? And then now the consumer's made the choices of what they've been given an option to choose what they want to do. Now they're involved versus you walk into a captive lender and, hey, this is what you're qualified for. It is what it is, and that's it. And there's really no other option there. We are providing those options, which sometimes can make a big difference.
Sure. Yeah, and not just options between, here's a fixed and here's an ARM. It's like, no, we have a 30-year fixed here with this lender. I have a 30-year fixed over at this lender. We just did one today on an investment property. I shopped around 4 different lenders and found one that was hundreds of dollars less. And again, the luxury of having options is
it was a 0.25% better in interest rate, wasn't it?
Yeah, I mean, it was a big difference.
That's thousands of dollars.
Yeah. It's even larger than that. It's just, again, but if people don't know, how do they know? You can't assume. Again, this is the largest investment that anybody listening to this probably will ever make. Most of you, and
until you buy a bigger one.
Yeah. But I mean, how many times will people go down the street and say, "Oh, gas here is $1.95. Well, it's $1.86 over here," and at the end of the day, you save a few bucks because you can see that and it's easy to comprehend. But
you make a very good point right there. They will drive down the street to save 5 cents a gallon, but they won't make the extra phone call to double check their mortgage interest rate to make sure they're getting a good deal.
Yeah, the biggest amount of money they'll ever spend.
Yeah, which when I'm talking about 10 gallons of gas here, we're talking about a 30-year fixed rate mortgage. You're talking hundreds of thousands of dollars in interest that could be paid. It's definitely beneficial for you to at least make a second phone call. We would hope it would be us, but if it's not, at least check with another lender, and see what's going on, because you, like you said, you don't know what you don't know.
Yeah.
And you might not, maybe you are getting a great deal. If you are, awesome.
But get that reaffirmed.
Yeah, you're going to know. Let
somebody at least reaffirm that information.
Yeah.
That way you do know and you didn't go off a pure assumption.
Yeah.
So there's a retail bank. And again, what's a correspondent lender? There's another one out there. Again, how many people know there's this many? Is there a mortgage bank or a wholesale lender? Do you know what you're working with out there? Is it a retail bank? Is it a wholesale lender? Is it a correspondent? Do you even know what the differences are? That's what we're trying to shed light on here. So with that said, a correspondent lender, what are they? I mean, again, to simplify it, it's kind of in between the wholesale lender and the retail. They're still pretty much subjected to one lane. Maybe have another one if they are lucky enough, but for the most part, they're going to be more expensive 9 times out of 10. What have you seen between correspondent lenders?
The big difference is they are going to underwrite and close and fund the loan themselves, and then they are going to sell it to an investor that they choose. So they have the right to pick the investors of who they want to work with or who they're approved to do business with. I would say the biggest difference there is, if they're several things could come into play, but if they're newer, or maybe their guidelines are tighter, or something changes, or they're going to limit potentially what they can do. Number one, because they may not have an outlet for it, and number two, they have more staff and employees that they have to pay internally. That
cost right there.
Yeah, which is cost, which potentially can lead to a higher interest rate, more upfront fees, something along those lines that you don't realize.
The infamous PAC fee.
And you probably will be
Yeah. Whereas with us now, it's everything is you're utilizing technology in a centralized location to get things done, to make things cheaper. Just with the invention of internet and stuff along those lines, it's becoming cheaper to do business A lot of these companies can backbone off of Google servers and Microsoft servers and things like that. So you're utilizing, billion-dollar company technological backbones to run their companies. That makes things cheaper. They can operate more efficiently, and they can operate cheaper, which flows down to the customer.
I bring the correspondent up because I know I've had to bail out correspondent lenders on numerous occasions last year. And then just comparing side by side, the cost difference between the two it's ridiculous. Not to mention the knowledge of some of these things I've heard people say, giving pre-approvals out when never should have been given out. But that's.
Well, they're not all like that, but
they're not. But
you've got your ones that you run into that.
Well, why would people become a correspondent? And I mean, we know because obviously they want to underwrite the file themselves. They want to have a whole process in their office and that kind of thing. But with technology the way it is, the speed and accuracy that we're using right now blows that away three times.
Yeah. Well, they're gonna present one option saying that they can do everything there and it's all underwritten locally, and they can go down the hall and talk to the underwriter. Yeah. Which I understand that, However, I can tell you that I know people in that world, and that underwriter still has a job to do, and they still have an order in which they need to do things. And you can't just walk into their office every single time and bother them. They have things they need to do. On our side, we can call the underwriter. We can call the underwriting help desk. There's people that we can reach immediately, and we can sit there and call whoever and get them on the phone and get an answer. So in the past, maybe there was a difference because it wasn't like that. And now that's not the case.
Right.
Now it's, again,
so
because of technology.
Does a correspondent make more money? Do they charge more money? I mean,
so that's the other thing. The correspondent has the option, if they want to, the way that the fees and things are calculated is different. And it's not disclosed the same. It's legal, but potentially they might have more fees, or their interest rate might be higher, which is going to make them more money.
Right.
The potential is there. That is a big reason why somebody would go to do that.
Well, then you hear the horror stories about the bigger lenders that have, they hire 50 kids out of college that just taking the phone calls and try to use the TV marketing and whatnot. How much professionality is in that. And, are they just throwing a bunch of stuff up and see what's going to stick? You know what I mean?
So there are is a major lender that, let's be honest, is really, 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 really good at marketing. They are. They're very good at marketing.
Sure.
You see them everywhere. They're all over everywhere. Between print, Facebook, social media, TV, online.
Sponsored
they're
football
everywhere.
games.
Sponsored football games.
Right.
Well, what's the most expensive thing normally in a business? Advertising.
Sure.
What do they do? What do they do the most of? Advertising. That can potentially, or in their case, does lead to higher interest rates, more costs that the borrower is going to pay. And if somebody doesn't know, they go there and they think everything's great because the customer service is phenomenal, because it is. They don't know any better. Well, that phenomenal customer service may have just cost, X customer potentially thousands and thousands of dollars.
Well, yeah. Trying to get
interest,
or you're really close up on your closing date, and you're trying to figure out when I can schedule my movers. Everything's all great until it's not great, and right before closing, and that's when people would regret not making that second phone call. And then maybe they do make a second phone call because maybe something fell through, and they find out, wow, this is way cheaper, and this process is a lot easier. What was I doing?
I just closed one
yeah,
where the offer, the listing agent did not feel comfortable accepting the offer from essentially a call center.
And that's really what it is.
Because it wasn't here locally. Now, granted, our underwriting's not here locally, but I am. And he knew me, and he knew the abilities of Stratton Mortgage and our reputation locally. And not only was the borrowers able to win that contract, they were actually able to save, I think it was somewhere in the neighborhood of $4,500 less in cost, and get a lower interest rate by not going with the call center retail, lender. by going with us as a mortgage broker because we could shop around for them.
So your realtor's suggestion to that client saved that client roughly $4,000.
They suggested that they get a second opinion, and said, hey, just double check,
Is about $4,000 difference.
So we were able to save them money, on the cost and on the interest rate. And in that particular scenario, the listing agent knew me and, knew Stratton's reputation and knew that, we're doing things the right way. And that was the difference between accepting the buyer's offer and not accepting the buyer's offer.
I just lost 2 over the weekend. The guy made bids on 2 different houses and lost them both. You know what I mean? Which was, we were trying to do some seller paid closing costs. But your fact of the matter is that deal got accepted because your name was on it.
Yeah, it's not always going to happen,
Yeah.
but Stratton Mortgage still, so we are still here locally. If you draw a 2-hour circle around Columbus, pretty much that's primarily why we're operating, right? And so people know us and
that's a lot to
real
be
estate
said.
Agents know us, title companies know us.
That's a lot to be said too, because a lot of these lenders, they're doing nationwide lending and things like that. We're just in Ohio, and in fact, I think I've only closed 1 loan outside of the Columbus and vicinity area all year. So it's all been in Columbus. So
Yeah, for the most
like,
part.
is it Scott Schiff that says keep
we're
it
part of the
local?
community. No, that's why I just said the other day, we're active and engaged in the community. I mean, we know what's going on in this market, whether it's purchase or refinance, because we live and work here. Our friends live and work here. Most of our customers live and work here.
Good pulse in the city.
Which things are going. Columbus is really good right now, and a lot of things are improving. But if you're not from here, you're not going to realize what's going on, and you don't know that Southern Orchards is an up and coming area, or Marion Village or Old Town East. You have no idea what those areas are. Well, we do, and that can make a difference in your pre-approval or where you're looking or programs that you qualify for, because there are special programs sometimes available for certain areas that those lenders probably don't have, or because they only have what they have. So
a good point too with our lenders with investment properties. I mean, I have some guys that are buying stuff up, and you can't do the same thing you can do with a bank. I mean, we have a 75% no-doc program now. That means you don't have to show any income. You just have to have a down payment. You know what I mean?
That, and as long as the rent,
right?
It's debt service coverage.
Yeah.
So as long as the rent meets the requirements, based upon average market rents that a third-party appraiser would give to us. So it's not somebody's just not picking a number up out of the sun. It's got to be a legitimate number. But as long as that's happening, they're lending. So that's nice, because a lot of investors are coming into Columbus because of the market, and so that gives them an opportunity to purchase an investment property.
You could have up to 5, I think, with a lot of our people too, and some even 10.
10. You can the debt service one. You can do 7 of those loans with that one lender.
Right.
Now we've got more than one lender that covers that, so technically, you could have a pretty large portfolio of those loans, as an investor or property. So
yeah. I've got 2 actually. One has, I think, 28 houses now. One has 13, so they're doing pretty good with that thing. So
yeah, that's good. Yeah, that's really good.
The first guy doesn't even work anymore. He just kind of oversees his guys and go out and do what they
Collecting
gotta
rent.
do. Well, yeah. I mean,
Oh yeah, if you turn back the hands of time and go back to 2009 and start buying up properties, where would you be at today?
Right.
I mean, how many people wish they could turn back time and buy Google stock or AOL stock?
Right.
Again, hindsight's always 20/20, but
a lot of properties downtown we could have bought a couple
exactly
years ago.
for pennies on the dollar right now.
Dollar.
But again, that that goes right back into the investing in the Columbus area that is rapidly growing, one of the hottest cities in all the United States right now. Just the appreciation I've seen alone in the last 2 years doing friends and family or whatever loans. It's just been, I mean, it's a lot of appreciation and being invested into real estate, almost more so than the stock market, the way things are going right now, it seems. But I mean, yeah, I think we pretty much hit a pretty good nail on the head there between the retail, correspondent, and wholesale. Is there anything else you guys would like to ad-lib on the retail side? And the hashtag why brokers are better.
Well, Adam, you worked before.
So I've worked at probably what some can be considered the largest major bank. I've worked at a small regional bank. I've been a correspondent lender, and I've been a mortgage broker. Each model has its quote unquote advantages, but I feel like really and truly that a broker is the best place for a customer to get a loan, because we can provide different options and look at different lenders. And we even see it right now. We've got one particular lender that we used a lot last year, and their interest, for some reason, we don't know why, their interest rates are higher. They're asking for more conditions that they weren't before, and it's harder to close a loan with them right now. Well, if we worked only at that lender, we'd be stuck. It is what it is. We don't have to technically send them any loans right now, or if it's a loan that's maybe they're doing better at, we can do that. If you go back to pre-trib, we used to send almost everything to one, pretty much one major local bank, because it was a great deal. As soon as the new guidelines hit, they did not adapt.
Well, that rolls into what we spoke about earlier, the technology. They were unwilling to invest in the technology side of things. Their investors and checking and savings appear to be way more important than closing loans and being efficient
For third party, for third party originations,
keeping up with what everybody else is doing on the wholesale side. And they fell by the wayside in the wholesale world. And
we had to make a change. We had to go find, hey, who's an investor that we want to work with on a regular basis that does a really good job. We had to go find that. It just, we didn't just willy-nilly pick, okay, well, we're going to go with lender Z because they're next on the list. We typically only work with really good vetted companies, that do a really good job. So, that's another thing too for us, is just, we are looking for those really good companies that do a good job, and if that's possible, if they can service the loan too, that'd be great. Nobody can really guarantee that, but that's nice. So we do look for those things. It's not all about who has the lowest cost or the lowest rate or the quickest turn time or who services or who doesn't. You have to balance what that customer wants and needs.
And again, that's the broker giving us, being a broker gives us the option for outside the box stuff too. The double wide manufactured house on 13 acres or whatever, that I closed 2 months ago.
It's actually not that bad to do.
It's not really that bad to do anymore. It used to be that would be, you had to go to one place where you used to do that back in the day. But now that stuff's commonplace. And you're not going to be commonplace if you're going into a bank. Whereas a broker, we're going to find it. Yeah. Give us a day or two. We'll find it. So that's pretty much how it is.
And I can tell you that, because I've worked it all, and I know that guidelines and things change, and mortgages ever changing. But in general, we have the most options and typically the best options for somebody to come.
And if we don't, you're going to know. I mean, it's not reinventing the wheel.
A great example is the OFA loan. We cannot offer the OFA down payment assistance loan because we're not a direct lender. We know we've had borrowers that really truly was the best loan for them.
And we tell them.
So we said, hey, we've got some friends in the industry. Have them take care of you. You get the loan that you need.
Well, and the difference with OFA is the OFA is like a second lien for the first 5 years or something to that effect. It stays on there, correct?
Mm-hmm. Yeah, so it's a second lien, so they're getting down payment assistance. Some of the programs, some of you don't. There are some different versions of it, but at the end of the day, it's a program where if somebody needs to kind of bridge the gap and needs some money for the down payment, they can utilize that. Now, we have access to our own version of down payment assistance programs, which in general offer better terms than what the OFA loan does.
Because they're actually grants.
Yeah,
they're free money.
The point of that, right? The whole point of that was, though, is there are some certain things that we're not going to be able to offer, but we're going to tell you, we're going to get you to whatever institution or lender. We all have been doing this for a long time. There's probably collectively over 45, maybe 50 years of experience at this table. We have local contacts, and we know other people that work at banks or work at other retail lenders, or somebody that can be able to do that type of loan that we would recommend. And you can go talk to them if that's a program that you need. We want to see you get in the home.
Whether that's with us or somebody else. I mean, again, we would love to work on your loan, but at the same time, if we can't sit here and tell you 1 + 1 = 3. That's not what we are here for.
It's rare, but there are things that we are not going to be the best at. And if that really turns out to be the case, that's really what they need, then
We tell them.
That's what we tell you. Yeah, I
yeah,
mean,
It's a great
is what
deal.
it is.
Yeah.
Again, math never
Yeah.
lies. That's the numbers are there. And again,
and
just show
actually, trade has made it chimed in. So the biggest thing in our world is transparency. So with pricing and everything and the way things are disclosed and credits and whatever, legally we have to do things a certain way, and we are held to a little bit of a higher standard because we are a third party originator. So we are acting on behalf of the lender to give them a loan. Well, there's more, our continuing education, we have to do a lot more than what I had to do at the bank because the bank could provide it. There are some, more things that we have to do and have to be cognizant of in other guidelines like anti-steering. It's illegal for us to steer somebody into a loan with higher costs and fees. We have to watch out for that. That is monitored. That's in every loan package that we send out is that document. So, I mean, we really are looking out for on the borrower's behalf, and it's truly a transparent. It's a transparent transaction. We're telling you exactly what's going on. We can't just say, "Oh, well, we'll do this later for you," and add or don't add it. It has to be on the paperwork that's disclosed to you or redisclosed to you, or it's not going to happen.
On your 3-day CD, you're talking about what has to be
or
exact.
before your initial loan estimate or your initial closing disclosure or a redisclosed loan estimate. If we're going to give a bigger credit or something happens, there's a change. We can't make that stuff up, or we can't just take it away. We can't add fees. We can't just arbitrarily say, "Oh, well, John Smith isn't going to know, so I'm going to charge him more money." We can't do that. There's no way for us to do that. I think that's a common misconception, but transparency is really important in our industry, and that's what being a broker provides, or one of the many things that provides to the customer.
And when you said that, it triggered me to think, because there's a really funny commercial that I heard about investors of that nature. So as far as a wholesale loan officer, I mean, just the requirements and the background checking and the microscope that's on you in that part of the industry versus somebody working at a retail bank that is there's a big difference in the person that's holding or working on your biggest investment you ever make. There's a difference in the licensing and education between the two.
Yeah, the bank can essentially, that loan originator is held under the bank's license, and the bank is responsible for their education and things like that. Now, that's not to say that a retail loan officer, that every one of them doesn't know what's going on. I have many friends that work in major institutions that are very good. But in general, yeah, you're correct. We have to do continuing education every year that is much more entailed, is more hours than what we had to do at the bank.
On state level and national level.
Yeah, state
licensing.
and national, and it varies per state. So if we're in Colorado or another state that might need more licensing, or Florida, we have to take that extra education, and that's on us. We have to do that. So we really are held more accountable, if you will.
Yes. The background checks are more stringent.
I did redo the background check this year. Background check, fingerprints.
So you always want to make sure you know who you're working with. Because again, I don't think I'd want to jump out of a plane or skydive with somebody who's never parachuted out of a plane before in their life.
Unless they stayed at a Holiday Inn Express.
Then you're good. The key. That's always on the resume to find out if they did or didn't.
Then you're good.
Well, that transparency is all about, making sure that the borrower knows exactly what they're getting. Like with the big retail banks, something that a lot of people don't know is, during this time of year when it's cold and, mortgages are kind of dying off because people don't want to move in the winter, they're artificially lowering their interest rates to get production going, and then when the summer they'll lower them because they get too much production, and they'll fluctuate them to basically control how many people are applying and how many people
I saw that firsthand, and if you're there, then that's why I'm saying, and even if it's not a bank, even if it's just a captive direct lender, if their rates are going to go up, then you're stuck. Their rates are going to go up. You don't know. If that happens in our world, like with a lender, well, hey, you know what? Sorry, guys, we like doing business with you, but you're right. Everybody else is over here.
Yeah, this guy's moving with the market. You are not moving with the
we,
market.
We need to go here because it's going to be the best for the consumer.
Yeah, if they're too busy, that's how that works. If a bank is too busy, then they'll keep their rates higher to slow down an application influx to be able to allow them to catch up. And again, somebody's going to be paying for that down the road or immediately with that loan.
Awesome.
Well, I think
it was a good first session.
Yeah.
Got to just broker versus bank, some general info for the listeners out there. And
we plan on doing this once a week, so you can check our Facebook page out, Stratton Mortgage. Check our website out, strattonmortgage.com. We're looking to continue to grow here in the Columbus area, and we're always easy to find.
We're going to be on YouTube too.
Oh yeah,
YouTube.
we'll be on.
You'll be able to
this is
search
gonna be
us
all
on
over the
YouTube.
place,
We've
yeah.
got Pinterest, we've
Yeah.
got LinkedIn, we've got Instagram, Stratton Mortgage, and all those. So check us out. If you have questions, give us a call, shoot us an email. Our contact info will be there at the bottom of the video or down below. We'd certainly be willing to spend some time with you and answer your questions.
Cool.
Awesome, guys. That was fun.
Thanks, man.
Appreciate it. Thank you.